Okay, hello everyone. Hi everyone, I'm back again. Firstly, I would want to say a big thank you for those who are actually trying to encourage me. I want to say a big thank you. So today I decided to show you guys how I analyze. I started learning how to analyze. Um, Actually, a lot of people are actually struggling like me, but I'm still putting in the work and stuff like that. So I'm going to be very, very slow. We're going to go back to dates. I'm going to pick a random date because I know that July is a very deadly month for everyone. People do complain a lot. So this is the way I derive the way of trading. So I start the analysis from 1 month. Then what I learned about retracement recently from I learned from SK recently was retracement has to do with 3 candles and above. So I usually come here and I count the candles. I look for a candle that did not close under, that did not close like after this one candle, did not close under and the body closed on top. So I count this as 1 2. This is not close on top, so this is not a part of a retracement. So I come down here to see what happened at 1 month. I'm at 1 month. So I look at the chart to see what happened. Higher high, higher low. There was no break of structure here, but it came and did a break of structure here, broke down. So there was a kind of change of character. And so I can call this area a breaker block. From here, I'm just showing you how it is. From here to here, you can call it a breaker block. That was why there was a reaction there. So we already know it's already a downtrend. So I come down here, I see this candle here. If I drag it down, a break of structure, that was also showing a bearish momentum. So I come down to 1 week. On 1 week chart, actually, I look at the analysis here. I try to follow it. Break of structure. There was not a break of structure here, but there was a mitigation block here. You can see mitigation block, and this candle reacted there and came down. So there's a break of structure here. If you count the candles of retracement, count this one too, just 2 candles. This did not close under, so you can count this one as 1 2. I come down here again, the same thing, 1 2. It did not close above, the body did not close above here, so that wouldn't be categorized as any break of structure. Then the second thing I do is I come around that area. I developed that weird method recently. Then I start to mark all the fair value gap. I start to mark all the fair value gap. When the fair value gap is filled with liquidity, what my back testing helps me discover is market still comes back to that area. So I still mark the fair value gap even with this week there. I start marking all the fair value gaps I can see on 1 week, preparing myself that when markets get to that place, there's going to be a form of reaction in that environment. Just this is just 1 week. I already know what the crazy thing happening there. But if you draw a Fibonacci from here, I don't want to use too much time. From here to here, you will see that we're already in the premium zone. This is the premium zone and this is the discount zone. So we're already in the premium zone. So you put all your lines on the fair value gap just to indicate it's a form of internal liquidity based on my coach that I learned from. I'm still learning though. So on one day, I come down here again and I look at it. I look at it very, very, very well, and I see that 1 2, there was no any retracement here. You can see it here. Okay, let's see. Okay, we can count it as 1 2 3. There was a retracement here. This candle is cut of it because it did not close up here. So 1 2 3, 1 2 3. This was a break of structure. That was a change of character. It came here, mitigated this other block. You can see it here. Came down, did a break of structure, and it has broken structure above here. Also a change of character. Then I come here and I put my Fibonacci. I do not like this FXMCM broker for charting, but I just use it. So I come here and I mark all the places that have fair value gap. So I have here to 1 2 3 4. You can see it. There was also a change of character here. This signaling change of character here. You can see that here, right? Then Do not forget that this yellow line is from 1 week. So that's a resistance zone on 1 week. Do not forget that. And we're also on a premium zone from 1 week. Do not forget that also. So I draw my Fibonacci here. I have never done analyze this particular section before. I'm just doing it on the screen for the first time. Then there's a fair value gap. Oh, don't want to use that. There's a fair value gap here. There's a fair value gap here. Then I always put a blue line there also to remind me, if I go down to my lower time frame, that something is in that area for from 1 day. I just put my line there, just a reminder so I do not forget. Just a reminder. It's just to help me remind myself where I'm going to. Then I come to 4 hours chart. Then on 4 hours chart, I follow it again. Break of structure, break of structure. We count the candle retracement here. Break of structure here. It hasn't come back up, but there's a fair value gap here. But I go back to 1 day. I try to see what happened in that environment on 1 day. I'm not seeing anything that looks so nice. But I come back to 4 hours. I keep looking at the chart. There's a fair value gap here, and there's also an indecision candle here. So market might react here. I'm not saying it will. I'm not saying it's a must. No, but there's tendency it might react there, and I can take this up place as a form of liquidity. Fair value gap, a form of liquidity. Double top. You can see that double top. Then a break of structure here. This is not a break of structure. 1 2, not a break of structure. This is just one line. Another break of structure here. We count this candle 1 2 3. Break of structure here again. So the break of structure starts from here. You can see it. But now we look for the next one. Now there's no fair value gap in it. There's no liquidity void in it. What I'm seeing here is just order block. So the zone looks very sketchy to me. So when I draw my Fibonacci from higher high to the low, discount and the premium zone, I can decide to just put yellow. This is just to help you. The lines are just my own form of reminder that I should not forget what I'm doing. When I come to 3 hours, I'll check everything. 3 hours show me as a break of structure also, so I can take that from 3 hours as a break of structure because I try to check the whole time frame. The whole time frame matters a lot. So there's a break of structure here, there's a break of structure here, break of structure here based on 4 hours, 3 hours, sorry. Then I come down to 2 hours. On 2 hours, I'll be looking at everything. Break of structure here. We came down here, break of structure. There was a minor liquidity inside. This is an inducement level. Then there was a fair value gap here. You can see market came here to fill all the fair value gap. Now you can see there's also a minor fair value gap inside here. Like I said, I haven't practiced this before. I'm just doing it for the first time here. That's from 2 hours. Then I come down to 1 hour to see what 1 hour is showing me. Now 1 hour, this is a break of structure here. You can see that on 4 hours nothing was there. There's no also a fair value gap. I use fair value gap as my form of order, right? That's what I use fair value gap for. So I'm sorry. I use fair value gap on my form of order. So if I come down to 1 hour, I can see that there's a fair value gap up here. There's still space to be filled up there. I'm not drawing it well, so sorry. There's a fair value gap here that needs to be filled up small here. I start looking for liquidity zones, but what I do is I come down to 5 minutes. I try to come down to 5 minutes to look for liquidity, and that might sound very weird, but I mark my order block from 1 hour. It gives me a kind of assurance from 1 hour. I mark my order block from 1 hour. Now order block is, there are different type of order block based on what I learned recently. Also we have one that we always make sure that the week comes out of the like when you have an order block. Now we take the one that has the week out. Like now, if you want to mark an order block here, this one will be the other. This one will be the other block. This extreme one will be the other block. If you're marking an order block here, this particular candle, this one will be the other block, not this one. So there are different type of order, how we mark our order block. So I come down on 15 minutes, then I look for liquidity. I start looking for liquidity in form of double top. I start looking for trend line, something I can actually merge. This has been taken out by this one. So I come here again, I try to see if I could see a trend line merging. Then I try to look for an inducement level, but I haven't tried this before. In case I drop stop loss, bear with me. Okay, so on 15 minutes you can see a break of structure here. This is like noise, this is like consolidation kind of noise to me. There's a break of structure here, or a normal day. If I was trying on 15 minutes, I'll call this a change of character or inducement. You can see here, is it respecting the fair value gap? Yeah, you can see here on 15 minutes, fair value gap is like order to me, so I take it in the form of order. So you can see there's a fair value gap here, small one, but you have to look for liquidity to be able to trade it. You can see here, so fair value gap is like order to me. There's also a fair value gap here, but also you have to follow the trend of the market. You can see here, this is 15 minutes. This is 15 minutes. I'm playing with 15 minutes right now, but it's like a form of order. I use it as a form of order for myself lately. Then I start going, and ooh la la, can you see that it has reacted from what we marked from one day? But now I'm not going to get entry directly. We're not going to get entry directly. We're waiting for a change of character. Waiting for a change of character before you enter the market. You're waiting for a change of character. Don't forget there's also a minor change of character here. Minor change of character here. But from my coach, I learned actually fair value gap is very important. Order block, liquidity void. You check for the kind of order block, whether it's rejection, mitigation, or breaker block. All this matters a lot. Now, even though I want to take this as a change of character, if I just put my line here, I can put a line here and see, okay, did the body come out? No. So I can't call that a change of character, it's liquidation. But I can call this one that came out here as a change of character. Then I can draw my Fibonacci, which will be a very scary trade. I look for the nearest break of structure here. So I'll take it from here to this level here. And you can see what I told you guys. Fair value gap is very important. You can see there's a fair value gap here. There's a fair value gap here. Also, you can see it, and it's reacted. So that's how I've learned how to analyze the chart. So you can take some good pips which market has filled the order here. You can see it, right? So that's the way, the secret of what I discovered on how to analyze this weird market actually. So I hope this my content is actually good for someone who actually watches it and can practice the power of fair value gap, using it for his or her analysis. Make sure he can check the lower time frame for 15 minutes or 5 minutes to look for liquidity around that environment. If there's no liquidity in 15 minutes or 30 minutes or 5 minutes, okay, you have to run away for some time. You have to run away. So that is how I analyze my charts. Thank you.